You're watching Beyond Markets. Welcome. I'm Kenneth Igbomor, and on today's show, we'll get an update on Nigeria's plans to close its 5 million metering gap. Then we'll also shift our focus to the recent Aquaba travel market and find out how companies in Dubai are looking to tap into the African market. You can join the conversation with the hashtag Beyond Markets. You can also follow my handle on Twitter. That's at Kenneth Igbomor. Now, Nigeria's electricity regulator, NERC, recently issued a directive on the process through which electricity customers can procure meters through the Meter Asset Provider Scheme. Abimbola Banjo, an associate director and head of finance and accounting advisory at PwC West Africa, joined me to assess Nigeria's efforts to cover its 5 million metering gap in the next 3 years.
I mean, I'm sure you remember that sometime last year, there was a regulation by the regulators. I think it was sometime in April, and the regulation was called the Meter Asset Provider Regulation. I think I was on your show here to talk about that regulation in a bit of detail. And so that was supposed to drive the mass metering across the country. And remember that the metering gap at the time was circa 5 million meters. And the idea was for the new players who the MAP regulation cover, they call the meter asset providers, were to help in covering this metering gap over a 3-year period, right? And the regulation specified the ways in which you could access a meter or pay for a meter. So there were the upfront provisions. There was also the provisions for what you call the meter service charge, which is pretty much an instrumental payment scenario. Now, the regulation that came out last year didn't specify how the meter service charge was supposed to work. It didn't specify the pricing of the meters. It didn't indicate an interest rate. So what you now have is a case where the regulators have provided almost like a clarification on the previous regulation, right? And that came out last month. I think it was signed off on the 31st of August 2019. And in that regulation, the regulators have specified the price for a single phase meter to be about 37,000 naira, and the price of a 3-phase meter to be circa 68,000 naira. It's also specified the interest rates should the customer express interest to pay over a period of time. It's also gone ahead also to specify the periodicity of the review of those, either the pricing of the meter or the rate. And the whole idea of allowing customers to spread out these payments is the regulators have considered the fact that it is possible that certain classes of customers may be unable to pay upfront for these meters, right? So to make it easy to procure, you can pay for those meters over a maximum of 10 years. But of course, with every long-term structure like that, the inherent will be the financing component.
All right, so we'll get into the financing though, but let's look. So we've seen licenses come out. We've seen new investors also come in to take up the space as the meter asset providers. But what has been that feedback so far that you've been getting from the players?
Well, I mean, at the end of the day, I think it's a better situation than we had before. Albeit it's been a bit slow, but then again, you have to understand that this is a new process. And with every new process, you will have a storming phase, a numbing phase before you can start to perform, right? And so let's just say that they are in the process of normalcy, about to hit performance. Of course, there's been some good performance in certain discos, while others are yet to pick up speed. But generally, I would say it's a good idea. I think that there have been a few challenges again with respect to things like the recent increase in import duties. You know, that sort of changes the dynamics for the MAPs, right? Because the regulators have fixed the price they've capped the price for the meters, right? So if you cap the price for meters before the import duty was announced, the new import duty tariffs were announced, and all of a sudden there's an import duty, then there's a squeeze in the kind of margins that
you can get.
Absolutely. Of course, even capping the price in the first place, I think in Nigeria we generally have a tendency to want to, in quotes, over-regulate. I think some of the players in the industry believe very strongly that something of this nature should be allowed to free market forces should determine the pricing
and how that goes.
Right, but again, of course, you can understand where the regulator is coming from. These are the customers. The customers are their primary concern, and you don't want a case where the MAPs are levying more than what is a fair price on the customers.
All right, now looking at the timeline, though, 3 years, do you think they can meet up with the demand?
Yes, 3 years. So it depends. So there are many ways to look at this. If you're looking at it purely from an operational standpoint, can the current MAPs roll out as many meters to cover the 5 million people? That is definitely possible. But there are many challenges, and those challenges cannot be wished away. First of all, you have to even look at what's the economic power of people. Can people really afford to pay 37,000 naira and 67,000 naira for meters? You may say, well, there's the option for financing. Yes, but even with the financing, proper work has to be done to evaluate the ability of customers to still pay for these meters, even in a financing scenario. So I see a situation where after a lot of customers, and of course a lot of customers will be metered. Don't get me wrong, a whole lot. Maybe even up to 60%. But the point is, you are still going to get to the point where certain customers who live in Nigeria, who have access to electricity, will be or may be unable to pay for this service.
All right, but then, so you're talking about some of the challenges there, but I'd like to look at capacity now. In terms of, can they? So you mentioned earlier about the 5 million gap that we're trying to fill here. Yeah. You're looking at all the logistics around the country. Yeah. We have about 11 discos in the country, and then when the MEPs these are new investors coming on board. Mm-hmm. First, how are they working with the discos? How are they going to work with the discos in tandem? And also, the capacity of the MEPs, do they have enough, power I mean financial power, to see that this problem is finally checked?
I mean, I work quite closely with a number of the maps as well as the discos. So the biggest issue I have seen at the moment has more to do with some of the operational issues. So it's more operational issues than with issues around financing or the financial capabilities of the maps. Again, I think one of the issues you also need to, you need to sort of consider, as I just talked about it a few minutes ago, and the point is, if you have a 5 million metering gap, you have to dimension that number. How many of these people would pay upfront? I mean, a lot of Nigerians, particularly the ones that stay in Lagos, might have the financial capabilities to pay for these meters upfront. And then you go to the next set of people who are capable of paying over a period of time, right, without any hassle. So you have those people. But then again, you now have the next set of people who banks will not even borrow money, who they're a very risky set of people. Now that set of people, that size needs to be quantified. But I feel like a lot of meters or a lot of customers will fall into that category, in which case, if you provided them with a meter, they would not have the ability to pay for that meter. And of course, no investor wants to bring money into a business and
not get
absolutely, I not get decent return for that investment.
All right,
or suffer financial losses for that matter.
Looking at the developments in the sector, we saw the federal government, reach a new deal and sign an MOU with Siemens, But then this regulation started way before this. Yeah. But are these policies, are they not going to interlap?
Well, I mean, I think There's definitely some, in my view, some overlap, but I reckon that the experts in the sector, the federal government and the regulators are working, of course the Bureau of Public Enterprises, which is the arm of the government handling this process, are sitting down to make sure that there is no area of misalignment or obvious overlaps. But I can tell you that over the past few months, the NERC has been very busy. They've come out with a number of regulations. A lot of them have been going through readings. A lot of them are revolutionary. So you talk about things like the Performance Improvement Plan regulation. You talk about the franchising regulation. You talk about the MAP regulation. These are serious regulations. And if they're successful, they also have transformational effects on the way the power sector would be going forward. So it also begs the question: what would Siemens' role be when you look at it side by side with some of the work that the discos, together with the maps and other would-be investors, will be looking at playing in the sector going forward?
All right, but then looking at the sector generally now, since the privatization process took hold about 5 years ago, we've seen that they are due for another performance review. There have been challenges. Looking at the print media, you see quite a number of challenges that have been listed in there. Liquidity challenges in the sector are still playing out. How first do you think most of these discos will hold up to this review process?
Well, I mean, they have to first of all come up with their performance improvement plan. It's the requirement of the regulation, right? So they have to do it. And as soon as they submit their plans, the regulator has said they're going to hold them to what they have documented in those plans, right? So I think that it's a question of discipline. It's a question of putting a plan that is realistic and achievable, a smart plan. I don't think that it is beyond the reach of the discos to attain some of the milestones that the regulators are asking for. I think it just takes a little bit of mind shift and a bit of hard work, and just being a bit more efficient and effective in how some of the things they do will be done going forward. And I think it's very possible. Of course, if you require help, then they also need to get help from people who are experienced, who have done this in other territories. And of course, I think that a big part of what they should do is they should do more of peer reviews, because of course there's differing performance levels across the different discos. And of course, they have a forum where they meet. They meet at the annual meeting. So I would expect that in those meetings, there's some sort of knowledge sharing that goes on there, where the higher performing players are able to impact the ones who are not performing as much as they are. So I think that might be an avenue for them to explore improvements in their performance.
All right. Finally, and very quickly, on the meter asset providers, how would you see? What are the few things you'd like to see happen in the nearest term?
Okay. Well, I mean, I think in the near future, I think one of the big issues, which is the import, the rise in the import duty, I think that needs to be addressed. I think a 35% increase in import duty is very sharp. That might potentially slow down the ability for some of the MAPs to carry their functions. You may have one or two of them who may not be directly impacted by this rise in the import duty, but for a whole lot of them, there are about 30 of them. So if you have a disproportionate number being affected by an issue like this, then it would be a problem. I think also there needs to be some sort of let me call it a viability gap funding for people who we think may not be able to engage the MAPs for the acquisition of meters. I think it's very important that somehow somebody is looking at that space. I think it's not enough to assume that the financing arrangements inherent in this whole transaction will be sufficient to help solve some of the liquidity challenges. I think something else needs to be done. That I'm getting financing does not mean I should put my money in a venture where my money as a whole might get lost.
I have been speaking to Abimbola Banjo. He's an Associate Director and Head of Finance and Accounting Advisory at PwC West Africa.